I'm Sam and I help property investors understand real estate. Today I'm back home in Sydney, which is awesome. It's been an awesome week away though, and I tell you what, I've travelled to Brisbane, Melbourne, Byron Bay, done some pretty cool things. Lots of urban exploring, looking at real estate, my favourite thing to do. And today I want to talk to you about something which is on my mind. See, quite often when we look for real estate, our return is something that is so important. It's the oxygen that holds real estate together. See, controlling wealth for a long time is hard work. And it's easier the better the rental return or income you're generating from the property is. Now, one of the age-old debates is it better to go to a really inferior location where typically prices are quite low and rental returns are proportionately pretty good, or is it better to find an undervalued rental market in a very desirable location? Now, remember the big L with real estate. The big L is location, location, location. So for me, I love finding undervalued rental marketplaces. So what's an undervalued rental market? Well, it's a market in a really desirable location where rents have been stagnant for a while, where vacancy rates have dropped and plummeted, and supply around the neighborhood has virtually stopped, and future supply and development applications no longer are really in the pipeline. In other words, literally, the real estate market is going to rent what is in that marketplace, and there's not much more to come. But not only that, where people's incomes are quite high. So what typically happens in these marketplaces, undervalued rental markets, rents today are sitting at sort of 5 or 6%. But because of the nature of the situation, they're highly likely to grow to 6 or 7 or 8% based on your purchase price today and in a short period of time. So I love finding undervalued rental marketplaces in superior locations where you get superior tenants. And today, what is awesome is many pockets are appearing in that vein. There are some hotspots which are on my radar, which I'm doing some final research on. I'm so excited because for me, I don't like paying the banks. I don't like paying the banks at all. I like my tenants to do the work. And in real estate, if you can start out neutrally geared, that's good. But if you can end up positively geared or even positive cash flow within a few years of owning superior real estate, that's even better. Now, one of the challenges with the really marketplaces where you get sort of a 6% return straight away in a cheap marketplace is quite often the people that live in those cheap marketplaces really are living week to week. And the idea of putting more rental pressure on them, putting those rents up, and particularly where there's no wage growth, becomes a problem. Rents stagnate. But where people are earning hundreds of thousands of dollars and the rental market is undersupplied and where there's no real future supply looming are pretty cool places, and that's what we call under-rented rental marketplaces. Now for me, I love investing in under-rented rental marketplaces because I know I'm going to get a good deal, the big L, location, 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 but also I'm going to end up getting rents which are going to cover my mortgages. So just something to think about. Hope that tip is cool.